Welcome to week number 2 of our FTMO trading account. Most of the trades were taken on the Friday itself, and that is why the permitted loss is sitting at 4,720. So I can afford to lose up to 5k on a day on that account. So that is why we are more than okay in that current floating loss of roughly 280. And in today's video I want to give you a very brief update about the current status of the reeled in profits of the open trades, a little tiny deep dive into the trading system we are running on the FTMO account, because we are 100% automated trading here, so no manual trades whatsoever. We entering, exiting and also managing the trades via a trading software which is called The Machine. And in a nutshell, it is based on martingale by simply doubling down on a position if the position or the trade is not panning out right from the get-go. And that is also pretty much what you see here in our screenshot, that so far roughly 90 bucks actually realized profits. What doesn't really mean a lot. So we strive on this channel for honesty and transparency. And as you can see, pretty much the equity right now is sitting 190 bucks below the starting balance. So that simply means we have, as you can see, a floating loss of roughly 280 bucks. And that is the simple insight of this trading system, which is called The Machine, which is based on, in a nutshell, martingale. It is slightly different, so it's not blindly doubling down, so it's not escalating as quickly as other martingale systems, but nevertheless it is kind of a tamed martingale system. And you see we are currently sitting in 3 currency pairs: Aussie CAD, Aussie New Zealand CAD. And just to give you a glance of one of the positions, for example, New Zealand CAD, you see the initial position 0.1 lot with the biggest loss of 72 bucks. Then a second trade was opened a little bit later, and then it, how it is supposed to be for a martingale system, doubled down. And then when we quickly check it out on the charts, you see how it looks like. So we took actually long positions, price went just further down, took another position, price went further down, and then instead of just taking another trade with the same lot size, the lot size doubled on a now better price, so to say, right? Because now the system is simply hoping for overall price reversing, going to the upside and reeling in a profit. How this can look like, we have already seen before on New Zealand CAD, when in that instance it took shorts. So the first trade here was opened also with 0.1 lot, then the second trade opened here with 0.1 lot, and the third and last trade double the size. And then as soon as price is reversing and going into the desired direction, a profit is being reeled in. And before going into the upside of such a system, I want to briefly talk about the obvious downside of such a trading approach, because you are doubling down and you have to be comfortable with quite a big equity drawdown. So that does not mean you have realized the losses. It simply means that you are staying in the position until the position turns green. In the system there's also an equity drawdown stop, so it simply cuts all the losses at a certain threshold we defined, simply to avoid that the account will disappear. So that is kind of a protection mechanism we've applied in that system. And if you would trade such a system manually, I think that would be even harder than having this as an automated system, because first of all you have to pull the trigger yourself. You see that you're already in a floating loss, and then you have to double down, what is kind of weird and against all the traditions and best practices in trading. That is why it makes it very convenient having this kind of trading approach coded into a trading bot, which is doing all the work for you, exiting and entering the trades at whatever timing, whenever the entry triggers are fulfilled. And despite that obvious downside of such a martingale system, I mean, you can always don't have to always double down, as we're doing it here with this system as well. And you can simply also cut your losses. What you simply have to do at a certain point of time, you have to admit, or the system has to say, well, okay, it simply does not make sense to double down anymore, because, well, we are spending bad money on already badly invested money, so to say. And that is just a security mechanism implemented in this trading system. That is the obvious downside. Now going to the upside of such a system. And the obvious upside of such a system is getting very visual when we simply check out the balance curve on FTMO, and particularly the ones we've already seen before on the trading challenge and the verification phase we have run on FTMO, that our balance curve is relatively stable and almost in a perfect 45-degree angle, what is always kind of a red flag because it's a martingale system. But since we have implemented this security mechanism of cutting losses after a certain amount and also not simply blindly doubling down every single loss, it is kind of a tamed martingale system. And this is the obvious downside that, well, last week we reeled in roughly 40-50 bucks. This week we reeled in or realized profits around 40 bucks as well. So, and this kind of development will simply sustain over the next upcoming weeks. We will reel in 40-50 bucks per week, relatively secure, so to say, because this system is taking X amount of trades per week, and on average these trades will be close in profit every couple days, which then will accumulate to those 40-50 bucks of profits per week. So this system was internally developed by New Capital, led by Joost. He's the mastermind behind this system, and he checked all the statistics, was making sure if it makes sense midterm, long term, having such a system applied on your portfolio and particularly on the FTMO account. And overall it makes sense, even though of course there is the obvious probability that the account might blow up, because despite the security mechanism of cutting losses, this can happen 2-3 times in a row, and then also you will breach the 10% drawdown threshold. But this really rarely happens, and usually it only happens once, and then you crack on with this relatively stable development of reeling in these profits and having this kind of equity curve. And since I'm already having opened the FTMO dashboard, just let me walk you through the dashboard, how it would look like when you are trading an FTMO account. You see the starting date, you will see the reward date. You can also choose the reward date. So when you're a little bit more impatient, you can also say, I would like to get the out payment in the beginning of the month. You can change this, I think, 2 or 3 times. That is like kind of an interesting one, but they simply limit you to change the reward day. You see your current reward ratio. That is a very interesting pop-up, because you see if you're already eligible for the scaling plan. That simply means you get like 20 or 25% on top of your initial balance when you meet the below criteria, such as, well, having a track record of, I think, 4 months in a row, having at least 2 payouts, and having reeled in at least 10% of profits. Usually you also see in this pop-up tab your current payout. In our case it should be 90 bucks, then 80% of that. It's not showing up because, well, you've seen it before, we have floating losses for now and are sitting below the initial balance, and that is why we do not qualify right now for a payout. Then you see the account type is swing, what simply means this account is traded on a lower leverage, so 1 to 30, still sufficient for this trading bot, and a little bit less strict regarding the rules, so you don't have to exit all your trades on a Friday, and you don't have to have an eye on upcoming news. What you would need to have if you are trading the other kind of account where you get a higher leverage, I think of 1 to 100, but then you have to be really close on the charts. When there are like upcoming news, you have to get out of the trades, and on every Friday before the weekend kicks in. Then you also see your current results. So these are, I assume, from Friday. Today is Sunday when I'm recording this video. So you pretty much see that most of the trades were taken on the Friday itself, and that is why the permitted loss is sitting at 4,720. So I can afford to lose up to 5k on a day on that account. So that is why we are more than okay in that current floating loss of roughly 280, and the maximum is 10%. So on a 100k account, 10k overall. Then you get this consistency score, not really interesting on like a practical base for you. It's probably more kind of a way of telling FTMO to you of how they see your account, is it active enough or not, but not really implication actually on you, for you, or any effect on your rewards or whatsoever. And then pretty much just another table where you see if you have breached any thresholds, if you have failed any requirements so far. Just another pretty much high level overview of all the things you have to take care of, like your maximum daily loss, your absolute loss on your account, and the current profit, which is, well, the floating loss of roughly 280, our current already realized profits of roughly $90, that the overall profit is sitting at 189. Then you also get some insights on statistics. Well, I don't have to get into the nitty-gritties. You just see we have entered already 17 trades. The balance is sitting at 100k, a little bit above, equity below because of the floating losses. And then you just see a daily summary, and then, well, all the nitty-gritty statistics about your trades when they have been taken. Not really that interesting. You see just here once again all the currency pairs we trade: New Zealand CAD, Aussie New Zealand. And that was the weekly update about the FTMO account. Right now we are trading. If you have any questions, feel free to reach out. So check our point of contacts down below in the video description, and see you in the next one. Cheers and goodbye.